This is a trade recap for Friday, May 1st, 2026. Let's go ahead and get into it. Kind of a busy Friday. It's a little unusual for me, but hey, it happens. So, yeah, let's go ahead. Today was actually a red trade. So, it's been a little while since we've had one of those. The reason why is very, very apparent and something that, again, if you change it or you're doing it, it can sort out some things. So, I'll just go ahead and kind of jump into that in a moment. If you're a newer struggling day trader and you want to learn how to do this professionally, as well as learning how to analyze yourself, your trades, that way you can figure out what mistakes you're making and then you can take the corrective actions needed. The man you want to be learning from is Pat Mitchell. He runs a service called Trick Trades. You can find it over at tricktrades.com. You can read up all in the service. It is an education service, not an alert service. You're here to learn and learn how to do this at a professional level from Pat, who's been at this for over a decade now, and he proves it day in, day out, consistently, live on screen share. So if sounds like someone you want to be learning from, and I would highly encourage that this is someone you learn from. If you are serious about this, check him out. Check out the service. If you'd like a sampling of the information he puts out there, he does have a YouTube page. You can find that at Trick Trades as well. There are over 1,700 videos there. You will have an entire plethora of selection in terms of different content when it comes to day trading and how to do it and all this stuff. But you'll have to crawl through each and every one of those videos, pull out the information, and figure it out yourself, which will be extremely difficult. So I highly recommend just learning from the man directly. If you are serious about that, go ahead and check the description below. You'll find a link to the memberships and it'll save you a little bit of money on your first month. Now, that being said, let's go ahead and jump into the charts. Okay, so if you're new here, kind of lay of the land. We only trade SPY and Qs, basically the two most liquid ETFs in the market. The top row is SPY, the bottom row is Qs. Charts on the left are our daily charts, charts in the middle are the 1 minute intraday charts, and I keep my order execution here on the right. These blue levels you see on SPY and Qs, these are the levels selected by Pat that he plots starting the night before and then refining the morning of, and then builds our trade plans around them. Now, once these are set, they do not move for any reason. I do put our risk lines on there because that's just something I like to see to know where I'm risking off of. Now, for today, with SPY, we were kind of opening up right here above this level. So, and then where we are in the market, Pat was really not looking for any kind of long. So we're really looking for that short. Qs was playing in and around its level as we were coming into the open. So the plan was more or less to kind of wait for these levels to set up and potentially fail to get in short. Now, as you can see, when we opened up, we were much, much stronger than expected, especially on Qs. The trade I did end up executing was SPY. And basically, that's why you kind of say it's double risk level. This was a level that you could enter in on as we came in. Actually, pull up my entries. Give me 1 second. So as we came up into the level, executed with 2, pushed through, added 2, came up higher, added 1, and then added another 1 at the top. Kind of came back down into this level and held. I did not pay myself there. I was trying to be patient with it. Popped back up again and rejected this level. So came down. Actually managed to get the ad in there. The ads here and here are actually fairly decent in terms of their timing. Came down, then came up. Kind of again. This ad was a little late. Then it dumped out, and I paid myself. The problem is with this. This was 2, 2, 1, 1, 1, 1. So I loaded in heavier on the front side, and then corrected with a lesser number with singular contracts as opposed to 2. It should have been the opposite. And because of that, it did not correct the average enough. So simply from that one mistake is the only reason why I was negative $40 instead of being more flush to slightly green. Pat was green in this trade, and again, that's just where the mistake or the difference is. And I again fully see that. Again, especially in hindsight, going through and reviewing it. Again, that was a wrong way to do this. You should be building your position, start small, saving your size for those critical moments so you can actually do it appropriately. Because once you kind of come up here and it's well, it's things where it's like, okay, if you throw your size in right here, you're gonna have to correct with way more up here. You're gonna get oversized, and then if it doesn't work out, the loss again, you're gonna get uncomfortable. The loss is gonna be nasty to you, and you guys will think your motion, your discipline, like kind of starts to get eroded, if not thrown out the window entirely. Especially if you're new or struggling with this. So there's pretty simple fix on this one. Don't throw size in. Don't oversize on the front side, or don't add size on the front side. Small starter, build into the position, and again, correct with the appropriate amount of size at the appropriate levels. That was basically the fix of this one. And it would have, again, like I said, turned this entire trade around, essentially, because ultimately it did go higher. So you only have so many opportunities. And this was something Pat was pointing out this morning. Generally, you only have a few opportunities to really get back uh, green when you have one of the again trades proving to be stronger or weaker when again than expected. But again, you can protect yourself by just doing your executions and sizing appropriately. So that's something I need to get better at in terms of that aspect, as well as reading strength and weakness. Now, those things in any, again, are nothing special in and of themselves. It's combining them in the moment. And that's kind of where I seem to struggle a little bit is that in that moment, I see the price action going on, but it's not like registering in my brain that, okay, this is stronger than expected or it's weaker than expected. So for some reason, and that's a hurdle that I need to get over. And that's kind of the nice thing about losses. Sometimes they can point out, like, again, they give you concrete kind of information on what didn't you do right, especially when you have a coach or mentor that's also guiding and someone you can compare kind of against. Like, how did they do it? Because they did it successfully versus how did I not do it successfully? And then you can take the corrective action. So that's more or less how this one panned out. It's again trying to think to remember last time we took a red trade. It's been a while. Um, 20 plus trading sessions, so a month, if not longer. But they happen. This is all part of the learning experience. Don't let it again get in your head, mess with you. It's just part of the learning experience. So with that being said, that's more or less all I got on this one. Definitely some concrete, very specific takeaways on this one to again pound into myself, reflect upon, and put into action. So that's what we do. That's all I have for this one. Happy Friday, all, and welcome to the beginning of a new month. And we will catch you bright and early Monday for the next one. Have a good one.